Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. It is Sunday, May 12th, 2024. It's a little bit in front of noon here on the East Coast. We're going to shuffle through our trusty disclaimer, and we will also shuffle through our trusty intellectual property rights notice. And then I will get into the macro measure notes for this week. Going to leave them up there if anyone wants to do a screen capture, a snip, whatever you care to do. But we'll go through these and we'll go through the charts. So I'll get started on this. I think that this week just was a little bit of a subdued affair. Clearly, the bulls were in control again, but we do know that the finish of the week wasn't all that spectacular, if you ask me. And so I'm accustomed to seeing them finish strong. Excuse me, when they have the Bears on the ropes. Last week we did think that they moved things away from the danger zone, that rates rolled over, and then with Powell, we thought Powell's double talk. We thought things were improving under the surface, and the Mag 7 were looking better. And now I'd say they're poised. They're not looking like they're about to break out at this moment, but with a little bit more upside work, the Mag 7 could start looking poised to, make a run at their collective high. And I think that I'll do the best I can, just to mention it, but I've got a lot of traveling coming up in the foreseeable future, so I'll do the best I can. I hope to get these out on Friday, but we had a lot of stuff happening at Market Rebellion on Friday, and then I had to travel right after things wrapped up, so couldn't get to it. But anyway, let's call it like it was. The gang seized their opportunity. They're within striking distance to the ATHs. You can't really deny that. The bulls did keep it going. Friday, as I noted, was weak. I do think there was a little bit of enthusiasm lacking. On the flip side of that, though the USD, the TNX, the VIX all struggled a little bit, overall, VIX finished with a 12 handle. The dollar and the TNX are down but not out. Their support lines have yet to crack. So we're still not, I think, completely out of the woods where, they'll be making another leg lower dramatically, right? We just don't have that yet. So that's still a little iffy. So now that makes us have to consider things like, could we see a double top if we do go back to the all-time highs? Could there even be a lower high put in? Could we see them power through and then, of course, have to deal with the old false breakout, which is always there on breakout attempts? Or will we see a real deal breakout? I think the more I look at the market, that most sectors look pretty good still. I do still think there was risk on. So overall, it looks like they're gearing up to put another run together. It just felt like something was missing. Maybe we need a little bit more, I don't know, chop, maybe would be one way to put it. I felt like a lot of the intraday action was choppy. Sure, it was bullish. Sure, there was continuation. It just wasn't anything really special. Didn't really strike me as anything really committed. So I feel like as proceedings wound down, they just didn't deliver that exclamation point. You did get slightly positive closes other than IWM in terms of the four major ETFs, major market index ETFs that we cover, but they just let things close well off the highs in most cases. So you don't want to read too much into one day, but usually we've seen them really work their magic to finish strongly and then make sure the VIX is really down and out, but not completely. Getting close, but not completely. Anyway, I think you have to keep in mind that we're still in the fourth year of the presidential cycle. May, the month we're in, obviously, it can be solid, especially if there's a rough April. So that's a little bit of a wrinkle towards the from what we're accustomed to in the fourth year. But April was rough, may have been rough enough to address things that both months have historically addressed in terms of being weak in the front and in the fourth year. And we're also coming up where the summer months are usually quite good. So I think there is enough wall of worry out there. I still have a little tiny bit of spidey sense tingling. I haven't mentioned that in a while. I don't think I've had to, but I feel like there's something not quite right that's just lingering out there, and I don't know what else, how else to put that. You could cite this, that, the other thing, but the spidey sense is something that you just really can't put your finger on a lot of the times, but it's usually pretty good. That's one thing I think is usually been pretty good about me, but I'm not really too strong with it right now. Just a little kind of feeling that I don't know, this is all a little too neat, maybe something like that. Anyway, I think that we've seen enough corrective activity and time spent away from the highs that should allow for another breakout attempt, even a legitimate leg higher. And again, that wall of worry seems to be out there. So there's enough there to me that they could pull this off. And remember, this fourth year is the second best year. Remember, the summer's usually pretty good in this year, and therefore, right, they're sort of set up. The only things they've really got that are maybe problematic are, of course, um, right, the economy and all the hocus pocus being revealed. That's probably a long shot. They never really want to deal with that. But the financial system could be the issue. That's often the case. I still think that there's issues building there. I think that they're not being covered appropriately. That's almost always the case anyway. I feel like the gang will only deal with those matters at their chosen time, not ours. That's always been my experience, where you could see they always say, "Oh, we were caught off guard." A lot of people say that we didn't hedge, we didn't adjust, we didn't even take some money off the table. No one saw that coming. That's usually their excuse. But if a few guys like Ryan, myself, Greg, that are market makers and can spot things ahead of time and sort of be concerned about them in a legitimate way, then I really have a hard time believing that people that have a lot more time and resources and research and so on and so forth and connections have really missed these things. I think it's just they don't want to leave their book behind in terms of well, no, we're nearly fully invested all the time. That's just the way they typically roll, so they can keep charging the most for fees. That's just the street policy. Anyway, I think gold and silver are sort of contributing to. They're still, I think, off most radar screens. I don't think a lot of people are really focusing on them in a big way. We talked about that in sector situation, and I even macro measure, I think, back in the fall, where we just kept reiterating that we weren't interested because in those in the short run, because they weren't really behaving well technically, but that the big picture pattern has really nearly a decade and a half in some cases cup and handle formations that are forming. And we did say many times that those patterns tend to be quite good and they can really launch things. And so I think that's telling us something. I don't know what that is. Maybe that's also part of something's not quite right for me. I just can't put my finger on it exactly. But I think from what I've read, the buying has been huge, most by central banks, banks themselves. So something's going on there. It's not just domestic too. It's around the world from what we can tell. So that to me is something to keep an eye on. I guess would be a good way to put it. There's some very important players that are just really going big in there, and they don't normally do that. So that tells me that we shouldn't lose sight of risks, even ones that we're not really perceiving at this point. I do think you got to stick with your discipline dictates action. And if we do get going in this market, and I hope we do, you've got to just keep rolling. As we've been saying, really, Ron Ianieri just was great at our former colleague who's passed on. He was saying that he's almost became famous for just reiterating it. A lot of option traders obviously know how important it is, but Ron was, to his credit, made a point of always emphasizing that for people that were new, right? That you just don't, if you're an active trader that's got somewhat more of a short-term horizon, you just don't let yourself be lulled into a false sense of security. And even if you're doing well, right, keep rolling, because that always allows you to, if you're doing it properly, right, that always allows you to bank money and bank profits, right, as the stock's trending in your favor, and also keep your risk well under control. So it's pretty good stuff. That's why we're reiterating that here. I feel, again, I covered this, but I do feel like we've seen enough corrective activity. So I think they've got the bullish scheming going. We've been noting that, right, in terms of liquidity, all the stuff that's happening with the statistical chicanery and so on. It's really on turbo or hyperdrive, whatever. It's all there. It's not just the government, it's the gang trying to always go super rosy in most cases. The Philly Fed recently admitted that they couldn't account for 800,000 jobs that were being claimed in terms of people being employed. And the Atlanta Fed, just to mention a few things, the Atlanta Fed is just hallucinating versus the street. Wall Street there are two times the Wall Street consensus for second quarter GDP. So there's just a lot of happy talk and silliness, or uber silliness, super silliness, whatever you want to call it. It's just out there, kind of to be expected. But as I always note, just worse and worse and worse as time goes by. That it just becomes more egregious. The economic calendar is chock full this week. There's some important stuff in there this week, and also it's not as busy the following week, but it is also has some important information coming out the following week. So it could be a very interesting second half of May. Let's hope that it is, because I feel like it's been a little, last week to me was a little docile. I wasn't thrilled with the trading opportunities. I thought they were a little subdued. I think that in data that we're expecting it to support the inflation coming down. From what we've been able to glean, there's the way this is all going to shake out is that they're going to likely have a chance to celebrate that inflation is rolling over again. And of course, they'll use that, any weakness that comes, and I do think there could be some weakness that comes in some reports, and that'll really drive that lower sooner argument. It'll be back, and I think, as I noted in the last week or two, maybe I think that's now a lot more realistic than it was prior to recent times. Only because, right, really the Powell pivot makes that possible in my mind, the way he sounded. But I don't want to read too much into it. But that is what it is. What it is. You got to call it like you see it. I still think those issues are there. There's massive consumer issues in the auto market, housing market here, Canada, the debt servicing, the debt levels, the financials have issues. Some countries have issues. It's all being ignored, as is typically the case, but it's still there. And remember, the Treasury and statisticians have kept this super rosy glow on everything, and it is the second best of the 4 years of the presidential cycle. So remember, if we adjust for inflation, stock prices would be higher. So that's another reason to believe that more upside is possible, maybe even likely. But all those types of risks noted there, even out of the blue risk or black swan risk, that's always there too. So again, even if we think we're about to embark on another leg higher, there's all kinds of technical issues, as we talked about: false breakout, lower high, double top. Right? So we're not through there. We haven't cracked in TNX. We haven't cracked in the dollar, which would be nice to see. So yeah, you've got all that going on, and the inflation has really 80% of the market is undervalued if adjusted for inflation. So 80% of the market is not beyond their all-time highs if we adjust for inflation. So from what I've been able to tell, not quite near 80, but near there from what I was able to find somewhere on the internet. Can't even remember. Anyway, I see IWM as having great potential as a result, because it's the one really that if they really do start to cut, and that's going to really embolden companies and people to behave better economically speaking, that would obviously be the one that's just really well off the all-time highs, especially inflation adjusted. So that leaves a lot of potential, and that would be a good sign, right? If people felt confident enough to start putting money into the small caps in a big way, that would be a sort of vote of confidence that we're really going to muddle through what's been, I think, a very very lackluster economy now for several years, and especially when you factor in the inflation impact on so many consumers. So I'm going to leave the rest of it off the table in the interest of time, and we will just do a quick flip to our charts and we'll move on from there. Just a brief little outage in terms of the screen. Let me just get things knocked down here and bring back my main screen for the charts, the simplest screen that we can find. And I happen to be on NVIDIA here, so we may as well start out by talking about it, as it is the lead dog. I think it is the emblem, right, for this market. You can see it's back above all the SMAs. That's the first thing I would note, right? You're still in this corrective phase, and you are seeing the SMAs right themselves. In other words, the shorties are starting to pick up, and all they really need to do is work their way back above the golden 50 there. And if they do, you'll have that nice stacked and slope profile. And if they do that, that's usually a good sign, right? If the top dog stock of the moment is doing that, and coming out of this corrective phase, and it's really not overbought, right? At this point, the daily chart is nowhere near overbought. It's closer to 50, I believe. Where's the RSI on this one? Just to be, yep, so 55. So, yeah, I mean, so you've got the room there in terms of overbought, oversoldness. You've got the profile for the SMAs that could set up very easily. The breakout point is right here. It's not too far. And at that point, you're right back to potentially threatening the all-time highs. And so I think it certainly can do that. Again, I'm not really big on making predictions. There's always, there's always risks that are out there that even though you try, you can't really account for them all. But this breakout is something that, I would call this a relatively healthy pullback, right? This thing had a tremendous run, and it pulled back to somewhere between 38 and 50% retracement. And so that's still a bullish pullback in theory, at least. And it's right there again, right? Despite everything. So leading into EPS, right? It wouldn't surprise me if they start to, lean on this thing in terms of as something that can provide them with opportunity. Hey, it's time to do some work here. So obviously you got to keep your eye on that, and obviously that affects the semis, and you got to keep your eye on them, because if that's the lead dog, they are certainly, I think, the lead key sector. And they also really behaved, I think overall they behaved fairly well, right? They had a 38% retracement, and they're back doing something very similar. I don't want to get into too much detail, but they're acting well overall, and they haven't even really gotten the big help yet from NVIDIA. So they're close to breaking out. Remember, we talked about this line in semis for a while, and they did the old what the thing we talk about all the time, converting former resistance to support. They're maybe still trying to do that, but they took the 50 there in gold, right? They took the former resistance line, and they kind of tested it, and they're moving back away from it. They're above all SMAs, and again, in a short period with some more bullish action, they could have that SMA profile really looking good that a lot of people like. So with that being the case, look, that's it, right? I mean, that is you really should go here. I mean, right now, and barring something dramatic, right? This is pretty much textbook bullish behavior, textbook, right? Corrective activity, working. You're getting a lot of the things you like to see. It's not like they just gapped it up and ran it and got crazy with it. They're kind of methodically working it back up over the last few weeks. So it's got its opportunity to do something here. So I would say, aside from a news development or whatever, the odds would favor them at least taking a crack towards that ATH, right? And so we started out with these two important areas, and now we'll just go back and look, because this really just translates right back into the market as we would expect, right? That's the reason why we're looking at it. But the Qs have a very similar profile, right? And so what do you say about that, right? There's a resistance line I've got in the Qs. They respected it for 4 sessions in a row. And then on Friday, they even respected it at the low. So again, what I was hoping to see was a stronger breakout attempt, right, to get through it. Didn't really get that. I talked with Mark Lopresti on Cocktail Hour on Friday, and he was like, Wayne, you're not a bad week overall. And that was his take. And it wasn't a bad week. I just, knowing technically where these things were, I just thought there'd be a little bit more of a exclamation point that they put in, like, hey, we survived the test, and now we're really ready to start carrying this ball again. But they kind of fizzled out a little bit, even though, right, it is the best close we've seen in a while, probably since back in here. It's the best close maybe in a month's time. It still was kind of like, you can see the candle. I mean, it's just not an impressive candle. It's sort of like a lackluster session. And you had sort of a lackluster week. Yeah, the seizing we talked about after Powell, that all continued higher the way that we thought, right, the probabilities favored, but just wasn't really this amazing week where you just scream, right? I would be a lot more accepting of a kind of a weak Friday candle if I had this kind of a really supercharged week, or this kind of a supercharged week, right? Where you get that people are taking profits on a Friday after a really great week. But, I don't know, maybe they still were. Maybe it's they're thinking, oh, well, I was just here, now I'm here. So, but to me, it just kind of had a little bit of just lacked a little bit of enthusiasm for me. But I will note that, market breadth really is solid. There's nothing, it's not spectacular either, but it's sort of tracking along right with it, which I think you like to see, right? You prefer to see that. So I really can't complain. As far as being overbought, like, they're not overbought on any measure in the Qs right now. Right. And I mean, like, any view I have, I can't find anything that's overbought in terms of RSI at 70. So again, like, it's there. These things to me are poised to, they're set up in a way that they should be able to have a good shot at taking a run at the all-time highs. Will they do it? Of course, we don't know, but they're the conditions, right? The qualities of things that you like to see, I think they're in place. And it would almost be a little concerning, I think, if they were not able to do that. But you can't rule out lower highs, right? You just can't do that. And looking at the SPYs, right, they could potentially be putting in a lower high. All is pretty much textbook bullish behavior to me. I'm not going to say it's perfect. Have I ever seen better illustrations? Sure, but it's still quite good, right? There's really nothing here that's atrocious. There's a little bit of, if you look at this right now versus maybe some oscillator readings, you're not as impressive, right? You're not as strong, but that's one of those paradoxical things where, do you really want it to be if you're a buyer? I'd prefer that there's room for the RSI before it does become oversold if I'm thinking about getting in. But with the RSI at 62, 63, around there now, right, that to me, if they keep pushing this week, that sets up that sort of breakout, then potential pullback. Because if you really do break out to a new all-time high in this upcoming week, you're going to quickly get overbought in SPY, right? Because you're at 62 now. So if they do a nice little markup to like 530-ish, somewhere near there, by bursting out of the gates or whatever the case may be, they'll take us into overbought. That might set up the test of the former all-time high to see if they can convert this line here to support. And that would be, for bulls, that would be great, because if they're able to do that and then get ready for the NVIDIA and the other the following week's economic reports, Fed speeches, and all that, they might be able to really launch their Memorial Day rally quite early. But I have nothing that I can say. I mean, I think that's really that bad about things, other than I'm nitpicking a little bit myself on Friday's kind of weak finish. But right, they did get the bullish follow through, right? I think we were on that, I think, fairly good in terms of our discussion last week. And in webinars, obviously towards the end of the week too, with Powell doing what he did. I mean, I felt like it just really gave them what they were craving, and maybe all of us, no, I shouldn't say all of us, many of us are extrapolating his words or what, taking them the wrong way. But just, I'm not a great Fed reader or anything like that, but it just seemed to me like he's basically right. We're going to be there if we need to support the market. That's what I heard, in so many words. Now, the diamonds are another one, right? That you have to be impressed with what they were able to do, right? They're really just points, less than I think 1% away from the all-time high. Now, is it really in the all-time high if you adjust for inflation? That's a great question. I'm going to say no, they're not. Let me take a look at, we'll do like a 5-year weekly, and where would you have to get that? So is there enough really, right, from back in maybe these days with the way inflation continued to tick up? Are you really there? Well, I don't know if you're there completely, but I think you might be a little light on that, but maybe you're getting close, right? People that are a little dumbfounded by what's going on. I mean, that I think, to me, this is just with inflation really being a lot more than has been stated. This is really people pricing things, I think, in accordance with inflation. So even if you have qualms, right, you've got issues about this economy and the chicanery and the whole works, and I'm with you on that. I've hated that since day one of my trading career, that things are so fraudy is my new word I'm coming up with there. Yeah, things are so fraudulent, really, but there's a real fraudy froth to everything they do, but that's not changing. I mean, it's that's been probably been the way they always operate, and before me, after me, whatever. It's always going to be that way, because that everything's rigged to go that way. On top of it, that's how all the fat cats continue to get even fatter. You all know the drill. So, but yeah, it just almost makes sense too, though, I mean, that you would reprice things that way, right? If you're saying, well, this is something that can produce cash flow for me, right? And the way I need cash flow because I'm getting smoked on inflation. Yeah, I'm willing to pay more for that. I'm willing to pay more for those profits or those cash flow, right? To kind of keep things in line. But so there you have it, right? It even makes sense I think on a very simple market basis, but it doesn't make sense to me, right, in the case of, is this really legitimate? Is this really a great economy that the stock market itself should be, loving life the way that it seems to be? But, that might not be the right way to think about it, right? It really might be, let's look at the other factors like liquidity and positioning and all these other things. And just remember, this is something I didn't put in the notes, but just remember that a lot of celebrating happens in front of the first rate cut. So if the Fed in a few months does start to drop rates down, I would say hypocritically, but look, that's what's probably going to happen as of right now. That's what it looks like will happen, probabilistically speaking, based on the CME. Look, if that does happen, it's probably a good thing for the economy. But what we've seen from the Ritholtz sighting, right, that I would cite, the gentleman that produced the study that was with Ritholtz, or may still be with Ritholtz, the market's typically down 12% following the first rate cut 12 months later. So, right, so a lot of this is potentially, and again, I'm not predicting that, I'm just saying that's the typical outcome. So a lot of this is sort of front running, right? A lot of it's front running. So I would say probably as a victim of it, the Dow is a little bit of a victim of its own success, because it probably had the best week visually, right? And moved up maybe a little more vertically. So it's registering a 66 on the RSI. So that one's there, right, in terms of that. So I think you have to be prepared for a week that could produce a little bit of a pullback, following Fridays. Again, for me, a lackluster finish. For Mark Lopresti, he wasn't that concerned about it, and maybe he and I are just talking on two different time frames. maybe Mark's thinking more about overall, weeks, months, and I'm thinking more or less on behalf of, as they say, where I live, all y'all, in terms of trading. You may be a little more concerned about it, just because I think the swing, the swing nature of a lot of what we do, this could be a little bit of, there could be a little bit of dirty stuff happening here, not such bullish stuff, just as a follow through. We'll see, but I just have that sense that there's something kind of brought that about. This is, though, I think the sleeper of the moment. I really can't nitpick much when it comes to the sectors, right? If I bring up the sectors for us, like I just did, here's these RSIs on this one. We'll cover this in macro measure, but I've been looking at XTN and I've been looking at IWM, and these are sort of the kind of remaining problem areas for me, right? Where transports are just not looking that great yet. They did okay for the week. You can't complain. It's better to be up, right? Be up somewhat and then down, but it wasn't as if they really came roaring back. Maybe they will. But those, along with the IWM, I think that's going to be potential signal that if they start to go, both of those start to go, or at least one goes, maybe the other follows at some point. That's going to make me feel better about everything. At least I'll put it that way. I would like to see. I think there's a ton of potential here. Not only, right, could IWM sort of get back to the all-time high from 3 years ago, but remember, if we inflation adjust, it should be up dramatically from there, right? So really the thing, if we inflation adjust even off of the bogus government numbers, which are just a joke as usual, you're looking at, 268-ish, which puts it up here, somewhere up in here. And then I would tack on, frankly, more than that, because I think that that's a BS inflation number. But again, if they're willing to go in and buy these smaller caps and think that those companies are going to be on better footing and things are really cycling around, I wouldn't, I certainly would not, I wouldn't discount that, right? It's been consolidating for a while. You can sort of see that there's sort of sort of like this angled inverted head and shoulders-esque type action forming. And so remember, one of the things that I like to point out that, maybe I harp on too much, but I like when something's had a pullback and then the pullback is relatively shallow, but removes the overboughtness. And then they start launching from, oop, my screen just blanked out. They start launching their attempt to retake the most recent high from a level that is not that elevated in terms of overbought, oversoldness. I call it a base camp. I'm sure other people call it other things, but that's the general concept. And that, to me, allows them to really put a nice, strong mood together before maybe backing up a little bit. So I think that's what could happen here if they really have turned the tide the way that Powell seems to have indicated he would turn the tide last week. So that's my take on the major four. You can see that I'm more bullish than bearish, but remember, that's based on conditions. And remember that at 9:31 a.m. East Coast time on Monday, I could literally change my mind, right? If there's some crazy development, right? And that's the key. One of the keys. That's one of the holy grails that people are after, is not being locked in my opinion. This is only my opinion, but not being locked into your forecasts and because the market's dynamic, right? We have to be dynamic. That's my simple way of putting it. That's what I learned the hard way a long time ago. And so I'd be willing to change my tune. But as of what I can see right now, I think this thing's looking like it's ready to go. And I think they've got the TNX and they've got the dollar on the ropes. They are not imminently about to break down, where I would say these things are 2 or 3 ticks away from impending doom. Oh, that's right. I keep typing in TNX when I need to do the CGI. Hat tip to Barry for that, because I could not find what they changed this to. There must be a reason for the change, but I wasn't sure why they did this. But you can see, right, we could drop a support line under here, and if we haggle a little bit, right, it kind of puts us near these lows. I don't even want to get into it, but That's what I'm looking at. If this really cracks and rolls over and this whole thing is done and they've got that low or high put in versus here, then right, this thing probably starts taking a trip lower. And that if that's the case, that is a very big deal in my eyes. Not that that matters, but that's how I look at it. And then if we go to DXY, right, that sort of moves somewhat together a lot of the time. That's also right, not it hasn't cracked, but you can see that if I took a line from here, a little bit more weakness, this thing could crack. So you're not out of the woods yet, but if they really do roll those two over, um, it could be the summer of fun, 2024, right? I think they might, with the earnings and so on and so forth, that they usually do. Usually July they kind of rush up and into. And if they got rates really on the run and they're anticipating rates being, really reduced later this fall or maybe early next year in a dramatic way. Obviously, we all know that'll help all of us out as consumers and companies of obviously as well, and so forth and so on. And the VIX is right on its back. So that's been worked down. Again, if you think that your spidey sense is tingling or about to start tingling, or you think, you may want to start keeping an eye on this. And if we do see a reversal, then get yourself some vol. But this thing's getting right down to some of the lowest levels we've seen in a while. And so that is sort of complacency. You could say, well, that's complacency, isn't it? Yeah, I guess it is. It probably is, but it's also maybe reflection of the fact that, again, everything shifted, I think, psychologically and expectations wise, the way the markets are pricing it. And it makes more sense to me now because they think they're going to have inflation numbers coming down. I haven't seen anything that says inflation numbers are definitely dead in the water. They are certainly coming down, but I think the next bit of information we get on it is going to suggest that might be coming. That maybe people they put enough pressure on people financially that people have enough people have finally cried uncle, and that might certainly be possible. But look, this is getting down towards the lowest in years. You have a couple instances here or there that you could say was pretty close, but that gives you an idea historically of where you are, and you've got to go back quite a ways to get back towards here, right? Which is in 2020, pre-COVID madness. So you got all that. You've got all that. So that's getting down there. So you may want to talk to Ryan this week in the Phoenix portfolio or even other webinars about positioning some vol if you're not a believer. You still think, no, this is not over, or you feel as though these financial system issues will crop up, if you think something's going to happen. But I think as of now, we've got to call it as always, like we see it. And I really don't see anything other than the precious metals and transports and IWM. If the precious metals scream, there's a reason for that. Now that has me concerned. I do know there's a lot of risks out there, but in terms of just the charts, the only things that are really a problem is that the yields haven't cracked, the dollar hasn't cracked support as we just reviewed, and the transports are still lagging a lot, and IWM is still acting like there's a little bit of risk out there, to say the least, considering how it's 40 points below the all-time high nominally, and probably much closer to about 64 points below the inflation-adjusted all-time high. Just ballparking it. So if you think about that, there's quite a bit of there's 30% plus upside in IWM if this market really does get its mojo, because the economy itself is about to really get some mojo, maybe not in the next few months, but maybe for 2025, right? So that could be the case. But again, weigh that against the Ritholtz situation, right? So it's not easy because there's all these different factors like that. Ritholtz data versus what we're talking about here. So keep that in mind. I do apologize. I'm just a little wiped out from all the all the road travel I've been doing for different reasons. A little, I guess, road weary. So let me just wrap up on that note by thanking everybody for checking the video out as always. I do hope y'all get something out of this week that helps you, or maybe some week in the future. And I'll be in touch through my normal channels, right? My webinars and my updates and my new ideas that I help out with, and the newsletters that I try to help out with, and so on and so forth. And I'm going to wish everybody a great conclusion of their weekend and a great trading week ahead. And we'll see you all at the next cocktail hour. Thank you.